Welcome to Ownership, the podcast where we have conversations about capital formation in crypto and beyond. I'm your host, 8-Bit Penis, and this is season 1, episode 5. And this time I got the episode number correctly. And today I'm joined by Sheldon from P2P. Welcome, Sheldon.
Hey, hi, 8-Bit. Nice to join the Ownership podcast.
Yeah, thank you for coming on. And today we're going to talk about P2P. And I'm going to be asking some questions to Sheldon because what you have to know about P2P is they are the newest MetaDAO launch that's going to be raising. I believe it's going to be March 27th. Is that correct?
26th. 26th.
26. Okay. And the raise is going to take place through a couple days. And I thought it would be a good idea to have have somebody on from the team before we jump right into the ICO.
Absolutely.
So for anybody who doesn't know what P2P is, P2P is a USDC to fiat peer-to-peer exchange, I guess. Is that correct to characterize it as?
Yes, yes. Yeah, it's a fully decentralized P2P crypto to fiat exchange.
Yep. And they're mostly run in India, Brazil, and Indonesia. And
Argentina as well.
and Argentina as well. Okay, that's very cool. I didn't know that.
Yeah.
And yeah, so I'm gonna be honest, I haven't tried the app because I don't live in these countries. However, I do see the potential in something like this in all these other, I would say, emerging economies where banking or off-ramping might not be as available as it is in other places. Um, I think what's also very interesting about this raise is that you guys have previous investors like Multicoin, Coinbase Ventures. So I wanted to talk a little bit about why you guys chose MetaDAO. What was the reason that you guys went with this route? I mean, you already raised from previous investors. You already raised from big VCs. Some would say the best VCs out there, or one of the best. So it does leave us wondering on why you would go back to the market and raise from, the public. I, from what I know and from what I have seen you guys post, the biggest reason for this was trying to keep things decentralized, as P2P is supposed to be a decentralized protocol. But I would love to hear your thoughts on this.
Yeah. So thanks a lot for the introduction. We have big name VCs backing us. They will continue to back us if we want them to. Right. So why MetaDAO? Why decentralization even in the first place, right? So P2P is a very ambitious business. We are going after many emerging markets. There is a very large TAM category. If we get this right, we can be in 40 countries with a liquidity depth of couple of millions a day in each country that we are in. And what we have built so far is a proof of possibility that, hey, these markets really need a solution like this. And we have actually built the tech and have grown and shown that this can actually work. All right. So for a VC playbook, we are a very good possibility. I mean, we have $1 billion potential. We have already raised from big name VCs, and we can do one more VC round. But what that cannot solve for us is right now we did our pre-seed, which is $2 million. If we do our seed to series here right now, maybe a $6 to $10 million check right now from a VC, it'll give us money. But if you think about our business, the biggest existential risk that we have is not financial; it's regulatory, right? So we operate in countries like India, in Brazil, in Argentina. These countries don't have a proper regulatory framework around crypto on off ramps or peer to peer. They do have rules. They do have industry laws about how they look at Bitcoin, how they look at decentralized exchanges, etc. But they don't really have laws around P2P, right? They don't really call it criminal. They don't call it legal. But at the same time, some of the money laundering laws apply to these businesses. So somebody can show up and say, "Hey, I mean, uh, uh, P2P is okay, P2P crypto on off ramps is okay, but I have a suspicion that maybe there is some money laundering happening with this." Well, to prevent any kind of crime slash money laundering slash fraud from happening on our protocol, which has been a great priority for us from day one, and which we have adhered to. However, if you think about emerging markets, the regulatory pressures are immense. There is a reason why Circle's USDC, for example, is not natively available in India. You cannot pay INR and get Circle's USDC in India, but you can do that in the US. The reason is Indian government has not been sort of uh, giving regulatory clarity on stable coins for a very long time, right? So P2P fundamentally is a vehicle for stable coins to flow into emerging markets, where laws are not decided, technology is moving fast, and given the regulatory risk exists. When I say regulatory risk, I mean on a transaction level, they might freeze a consumer's bank account. On the organization level, it might be a subpoena to the CEO, or we might receive a legal notice to the foundation, right? So regulators go after centralized choke points on every single level, if at all they want to sort of block the service, right? So, but they cannot sort of block something when there are 50,000 owners across 150 countries, right? uh, that is exactly what MetaDAO has built. They said, we have this structure, we have a legal enablement structure with which we can distribute ownership of the protocol to a lot of people who are token holders, and we will use futarchy as a method to enable them to govern it, right? So if we take an early step in this direction, our question here is, which is the centralized choke point that a regulator would go after if our protocol is fully running on blockchain, if our code is open source, if the ultimate beneficiary owners of the protocol are everywhere across the globe, like who will be responsible to sort of take the regulatory heat, right? So this is our biggest win of doing the DAO decentralization slash MetaDAO ICO, right? This is something which VC money cannot buy us. We can go and raise a $6 to $8 million check, probably at a better valuation, given VCs want to sort of look at it long term or whatever. But we don't solve the regulatory problem. We don't. So fundamentally, starting off with MetaDAO, doing this round successfully brings us decentralization. We felt MetaDAO is the right way to do it, right? The whole concept of putting 50% of your token supply in the market, which is a large float compared to VC-backed companies traditionally, putting that much float in the market, distributing ownership, using futarchy as the ultimate decision point, so that the ultimate UBO risk is solved. All of this made a lot of sense. I mean, we fundamentally decided this might look like a crazy step right now, but it'll look really wise a couple of years down the line to do this.
What you're saying, to me, it makes total sense. Like it actually does make total sense. And it really clicked to me after speaking to Chris from like another MetaDAO launch from Loyal. And he said a very similar thing because they're doing a privacy protocol. And so for a privacy protocol, you have something very similar where you're facing regulatory risk. And so raising from the traditional routes might come with, with some downsides because of that. And so you've answered that part of why raise through the blockchain, because I think more broadly, that's really what we're tackling here is why raise on a blockchain. But I think I would like to know what you think about like futarchy. What do you think it is? Did you choose MetaDAO because of futarchy, or was it just because it's one of the best raise mechanisms out there now? Were you looking at any alternatives, or are you like a futard?
So I would not call myself a future yet. However, I sort of look at this as an adventure, and I'm pretty excited about it. So I don't necessarily think about it from a very idealistic sense that it is the best way. I sort of look at it as a great experiment, and a worthy experiment compared to what Web3 has gone through in the past. So I think it's a necessary step. So I think MetaDAO has multiple components to it, right? Like the entire, putting half of your supply in the market, sort of keeping team on a performance vesting schedule, keeping previous investors also sort of, patient by sort of locking up their tokens for a year, and then sort of the whole vesting term around it. I sort of felt the value of MetaDAO not only came from futarchy, however, it is the overarching, the value that they started on. But I think the way they constructed how a company should decentralize as a construction mechanism, right? We like that. There are many small specific details. I think the whole package looks good to us. I mean, the fact that, hey, this is the ICO structure, this is the mechanism, the whole ICM angle of internet capital markets on Solana, and MetaDAO being the hub of it. So we felt this ecosystem can potentially win, and we coming in and being part of this ecosystem early can sort of lift us up, right? So we definitely sort of looked at it from a pragmatic point of view. With VCs backing us over the last 2 years, they gave us the freedom to use the capital the way we could decide. We can decide what do we want to take bets on, which markets to launch, which marketing campaigns to invest into, how much to pay our staff or stuff like that, right? So this flexibility really helped us in that stage of the business, because it gave us the freedom to experiment, understand what the product should be, learn about the market, learn about the customer, how much will they be willing to pay, etc., and really construct the business model out and the product out. But the way we see it, in the next phase of our journey, we already have a business model, we already have a product, we have a customer, we know what to do, we know our TAM. So we see the next phase of our business as a more disciplined operation towards scaling, where we already know what to do. While there are decisions about treasury, about deployment of funds, which we can actually outsource to the community, which will actually sort of bring pressure off the founders. I mean, it's not easy to make decisions and then see to the consequence of your decisions. So letting the community decide and then acting by it also sort of takes some pressure away from your head, I guess. That really helps. So I think we as a company are in a mature place where we understand the business, we know what to do next. So community can come in to sort of take on the treasury responsibilities, how do we deploy capital and stuff like that. And that really helps us also to grow and then sort of build legitimacy as a company in the market. So we sort of see a bigger upside than downside in futarchy. Of course, there was bad news with Ranger, stuff like that. But I mean, there are always arguments on both sides, like who is correct and who is wrong. But decisions are made and decisions are followed. So we are committed to futarchy. It's new to us, but we will learn along the way and probably become futards, is what I would say.
I think everybody who starts out with futarchy then eventually somehow becomes a futard. So that won't take too long, I believe. And I think
Yeah,
like when we talk about decentralization, futarchy might be one of the most decentralized governance mechanisms ever, because there is literally no way for one entity to centrally control the outcome, right? With token voting,
yeah,
one entity can basically hold the majority of tokens and influence the outcome. With futarchy, anybody who's got cash can participate and push the price wherever the market or whatever they think would be
yes,
better, right? So I think that's also a very interesting way to look at it. Is futarchy is very decentralized in that way. You also did
yeah.
bring up that VCs did have your back, but how did they react when you told them that we want to go this new radical route of MetaDAO where we could even get liquidated? Like, are you not worried about liquidation? Um, does that ever come up in your head, or are you very confident that you won't have to see that happen?
Yeah, so we feel okay. There are two questions here: the liquidation fear and the VC reaction, right? So let me take on the liquidation fear first because it's something about us. Then let's go to the VC's reaction and then convincing them to the whole story and then getting them aligned. See, I think fundamentally we believed and we think that community also will see value in what we have built so far, and we sort of thought about it that hey, we can continue to grow, we can continue to show progress to the community month on month and get their confidence, right? So there is a decent amount of belief in futarchy and community that they will take good value decisions, and we have confidence in the value that we are bringing in, right? So given that we think whatever we built so far is valuable and we can potentially sort of make great progress for communities to see in the coming months, we are confident about the value that we would create, right? So given that we have confidence in ourselves, we are also optimistic that futarchy and community governance on the whole will also see the value we can create, right? So with a decent level of confidence in this on the both sides of the story, we sort of went ahead. We are confident that we are valuable in the first place, and we are also confident that futarchy and the community governance will see value in our work, in where we would build and stuff like that. We also learned from past ICOs, right? Like, I mean, we looked at Ranger, they were taking 250K in 11s every month. So we know that our burn rate so far with the VC capital is about 110 to 120K a month. We might slightly scale up in the coming months. So we sort of moved our allowance to 175K, and we sort of declared what we are going to use this allowance for. So we sort of believed that hey, if we keep everything upfront, transparent, especially about the money, right? About how we are going to spend the money, I think community would notice that. Community would sort of notice the proactive spirit and sort of work with us. If you want the community support, you need to sacrifice something, right? I mean, sacrifice. You need to sort of put in the work to sort of talk to them, educate them proactively, and explain them your position. We are very very committed to do our job of educating the community upfront so that later on there won't be any misunderstandings potentially. So we sort of start building a playbook internally on how do we sort of approach this problem, how do we build trust, how do we build a relationship with our community so that they know our approach, they understand the value we are adding, so that there won't be any negative consequences of futarchy, right? So we want, I mean, any relationship is risky. I mean, you meet a new co-founder, it's risky. You meet a new investor, it's risky. We are doing MetaDAO launch, it's risky. We are ready to take on the risk. We are ready to sort of work with the community. We are committed to the cause. We will educate the community and then sort of do it well, right? So we believe in ourselves. We believe in the value we bring in. We believe in the system. We are committed to make it work. So there is fear, but at the same time there is commitment. I think commitment outweighs the fear here, right? So that's the way we look at the whole liquidation slash treasury pulling out risk. Also, we are also thinking about how can we reduce the amount of money we can spend, right? I mean, we are very confident with AI coming into the game. We are using a lot of Cloud Max in the way we build code and we manage our repositories right now, right? So maybe 6 months from now to 1 year from now, we won't be needing as many engineers as we need right now. We won't be as the protocol grows. Maybe we want to sort of invest more money into growth and less money into product or stuff like that. So we are also confident that we can reduce the cost of running the company over time, along with increasing the revenues and the profit margins we make, right? So on the whole, you know, uh, maybe in a 9 months to 1 year period, if community can notice the economic value we are creating purely in terms of the amount of revenue we're bringing in, amount of profit we are bringing in, and reducing the cost, for which we have put up a financial model as well on our raise page. We think they will see value, right? So based on all of this, we have a proactive strategy on how we want to talk to community and how we want to explain them things, and we are confident it's going to work out. So we have a faith angle to this. So we are faithful about this. Uh, Coming to VCs, right? So VCs are aware about the regulatory risks we have, right? I mean, in the way Multicoin underwrote us, Coinbase underwrote us when they sort of funded us, they know that, hey, this product has value, consumers are going to pay for this, they will grow. Their biggest risk is regulatory risk. So they acknowledge the regulatory risk from the start. So when I told them, hey, MetaDAO and this ICO is going to be the biggest defense that we are going to have from the regulatory risk, they are excited about that in the first place, right? Because that can be a problem. I mean, it's a very valuable problem for our organization to be solved early, right? So they were super excited about that, which is the major driving point for them to get convinced. So yeah, so along the way, we thought, all of us thought, this is the best way to go ahead for the team, to do this.
Yeah, I think it's kind of remarkable how much Multicoin has come out and help you guys and stand in the public and tell everybody that they stand beside you. I think that speaks levels and volumes that they're very
Yeah,
serious about this investment, which is super
yeah,
cool. It's very cool to see VCs supporting this type of raise mechanism. And so I guess I would have a few more questions about the product itself, mainly because I think a lot of us who see this raise, it's very hard for us to really wrap our minds around what the value add of P2P is because we don't live in these countries. Like I don't live in India, I don't live in these countries. I don't, I've never used these apps. So how do you think you guys can communicate to outside investors, or how do you solve that communication issue or that pitch presentation to people living outside of these countries? Like how do you communicate the importance of this protocol?
yeah. I mean, I have a simple way for you to imagine the opportunity here. The same way you understood stable coins, right? So we have USD and USDC and USDT, which are stable coins, and USDC is more of a regulated stable coin from the US. Think about for whom are these stable coins built for, right? In the US, in the UU, you already have great banks. Your banks offer you, USDC, US dollar deposits. You have your credit card mechanisms. You have the infrastructure for banking. So I don't really see why you need stable coins on a day-to-day basis, except for the fact that you are in crypto and you want to hold some stables, right? But if you think about countries like Argentina, Brazil, India, go and check the USDC to USD to BRL or USD to INR conversion prices, how they're dropping, how much volatile they are, right? So what I'm trying to say is stable coin as a product is fundamentally made for emerging markets to adopt. They are the ones who actually need it, right? But the problem is, how will the emerging markets adopt stable coins if there is no vehicle which can bring stable coins to them, right? Emerging markets does not have credit cards. They don't have dollar bank accounts. They don't allow dollar user custom citizens to hold dollars in the first place. All they can do is hold cash dollar bills, right? So if there is no vehicle, how do you exactly bring in stable coins into emerging markets? So if at all you believe that stable coins are built for these countries, because stable coins are definitely not built for the US, they are built for the rest of the world for you to adopt US currencies, right? Because it's more stable, it's governed well. So how do the rest of the world get stable coins in the first place if there is no access points? Indian government is not going to allow stable coins to come into the country. There is no licensed exchange or CEX where you can sort of deposit rupees, take stable coins, and go on chain. You cannot do that in India, right? You cannot do it in most of the highly regulated underdeveloping countries. But these are the countries who actually need stable coins. So the only way to do that is P2P. So you enable people within that jurisdiction to send and receive stable coins to each other so easily so that they can do it. And the only way to do that is P2P. Yes, P2P has issues. How do people trust each other? Will there be regulatory bottlenecks? Will there be fraud? Will there be scams and stuff like that? But if we can solve all these problems, technically speaking, P2P is the only way in which people can get into and get out of stable coins really easily, right? So so if you are an investor from the US, EU, or one of the developing countries, I assume you understand stable coins. So if you do understand stable coins, you need to understand who are these built for. They are built for people in emerging markets. So just because you build stable coins does not mean emerging markets would adopt it. So they need vehicles to adopt it. So what are these vehicles when there are no card networks, when there are no banking licenses for stable coins? It's P2P. So that's why we're building this.
Yeah, I think you make a very good point there. I think there is a plan from the US side to really basically keep the dollar as a reserve currency and globally, and stable coins are a way to that. And so yeah, I do definitely see your point. Now, can you walk me through the user experience of this app? Like, how does it work? Do I deposit stable coins and then meet somebody in person? Does it take money from like my bank account? Is it cash? How would it look if I were to use this?
Yeah. So one great thing that happened across emerging markets, especially in the last decade, some background context to answer your question, right? So is India built this infrastructure to send rupees to each other called UPI. UPI is Unified Payment Interface. It's available only in India. It's like Venmo of India, which is built by the government here, right? So it's called UPI. In Brazil, there is a similar technology that most of the Brazilians use. It's called Pix. Pix is an instant transfer technology where you can send money to anybody in an instant, the local currency in an instant. In Argentina, there is something called Mercado Pago, which and Mercado Pago QR codes, which people used to pay and send money instantly to each other, right? So most of the developing countries, like most of Nigeria has one, Thailand has Prompt Pay, Malaysia has Do It QR, Indonesia has Curis. So this technology of instant payments is very very foreign to Americans and Europeans because you never had to adopt this because of the credit card networks you have. My younger brother actually lives in the US and he comes to India, and he sees this UPI and he tells me we should have the instant payments technology in the US, but the reason we don't have it is probably Mastercard and Visa are lobbying against the instant payments tech with the government, right? So you guys don't have it in the US, but every single developed country has this technology to do instant payments. So we are all on instant payment networks. We are not on credit cards. So P2P takes advantage of this. We built a mechanism with which users in emerging markets can use the local instant payment rails to transfer the fiat. So the fiat currency in a P2P transaction gets transferred between the users or user and P2P merchant on an instant payment rail, while the USDC transfer happens on chain. As a protocol, we coordinate this. We coordinate the transfer of USDC via our smart contracts when the instant payment transaction hits between the bank accounts using the instant payment rails in these countries, right? So the interface is looks like a very simple neobank app. You can go check it out at coins.me or p2p.me by yourself. Go to app.p2p.me and look at the interface. So easy. It looks like a neobank which has three options: buy USDC, sell USDC, or scan and pay with USDC. When you sort of use scan and pay with USDC, for example, you have this UPI scanner in India, you have a Pix scanner in Brazil, which you can scan. When you scan the QR code, your USDC will be deducted. It will be sent to a P2P merchant. They pay on your behalf for that particular QR code within 90 seconds. So we sort of built this human coordination layer for people to sort of pay for each other, people to sort of do peer-to-peer transactions with each other so fast. We are the very first ones to do it. Each transaction goes within 90 seconds. You can monitor every single transaction on our dashboard, which is at ops.p2p.me. Right, so this is the stack. So we sort of leverage the local payment rails, and we use the blockchain to send USDC, and we enable this exchange and coordinate in such a way between humans, so it is super fast.
Yes, it's basically a very interesting merging of like blockchain and like India's own payment network. It's like an amalgamation
Exactly.
of those things. And so, yeah, you
Yes.
mentioned coordinating humans. Now, that is something that I find very interesting because with these P2P exchanges, I would presume that there is, a lot of fraud. Now, I don't think that you can completely eliminate it. There's always going to be people who do fraud, but what are you guys doing against these, and how do you even combat that?
So the entire exchange and transfer happen on chain between the users. So what happens is, over the smart contract, two parties get matched for a P2P trade. And we have an independent AI fraud server which keeps watching every single transfer. And if it sort of finds any risk, any counterparty risk with that particular trade, it immediately raises a flag to the counterparty to not involve in the transaction, right? The AI fraud server we built is an independent system which is monitoring the on-chain transactions and just sending fraud notices to people who are involved in these transactions to prevent fraud. That's how we prevent fraud, basically.
Is this KYC? I believe you guys use something called a ZK verification.
Yeah,
How
yeah,
does that work?
yeah. Okay, so so every user, we use ZK KYC. It's zero knowledge KYC of their social media accounts. So we look at your X account, your Instagram account, your LinkedIn account in a completely privacy preserving manner to understand, hey, does this guy has a valid social media account for a couple of years? Does he have an account history? And based on that, we understand if a user is a general human being and not a fraudster running a server farm to hack into the protocol, right? That's our first layer of defense, which we sort of look at a ZK KYC and then sort of set up some kind of transaction limits for the users. That is the first step. The second step is we sort of look at your transaction history and sort of build your reputation profile. And we also have an AI fraud management engine which keeps track of every single transaction to sort of look for suspicious behavior in real time, right? So all of this combined prevents any fraud from happening on the network.
Okay, gotcha, gotcha. I can uh, also I can also see, like, I'm on a website now, and I can see that you can also be a liquidity provider and earn 2% on every swap. What does a liquidity provider do, and
Yeah.
and how do I become one?
So liquidity providers are like market makers in a CEX, but we also create a lot of jobs by doing this. Like because when you want to buy USDC or sell USDC, because there might not be a real-time customer or counterparty who is able to buy your USDC when you're selling, or sell your USDC when you're buying. We need a market maker, right? We need somebody to do that job. So we have a third party, which is basically P2P merchants who sort of maintain a book of buyers and sellers and fulfilling both the orders. So P2P merchants get a commission on every trade they process, which becomes a monthly income for them. We have observed that most of the P2P merchants are like Uber drivers or housewives, gig workers who use their own bank account to sort of do P2P trades all day and make an income out of it. They are the ones who sort of settle transactions in real time. Now we have about 500 P2P merchants on the network across Brazil, India, Argentina, and Indonesia. We have about 23,000 users and 500 P2P merchants. So the more users we will have going forward, the more P2P merchants we will have as well. So the network totally have three parties, two parties, users and P2P merchants.
Yeah. Um, Okay, so I guess it's kind of like, yeah, that's pretty much market making, and so people can you know,
Yeah.
earn money on providing liquidity. And what do
Mm.
you guys charge? Like, how does P2P make any revenues?
So we charge a spread between the buy and sell price on the protocol, which is independently decided on in each country. In India, right now, we make 3% on each trade, 1.5% from the maker, who is the liquidity provider, and 1.5% from the taker. So we make 3% on each trade, on the fiat and the USDC trade. Like two trades are happening for each swap. So 3% in India, Brazil we make 2%. In Argentina we are charging 1.5. In Indonesia also we charge 1.5. We increase the spread amount as the depth of the book increases. As you have more liquidity, more LPs, more merchants, more users. We tend to take more fee. It is similar to Uber. The moment you have more drivers and more users riding, you sort of end up getting the leverage to charge more commissions. So we sort of economically work similarly on chain, however, right? So that's the idea. So we make revenue on each swap in the form of a spread, and we use part of that revenue to sort of incentivize these merchants, P2P merchants who are market makers on the network. So that is our only cost. Except for the cost, everything else is profit, gross profit.
I think what also I'm wondering if you guys, since you're telling me that this problem is so big in India of like off ramping and on ramping and using USDC and whatever, I'm wondering if there's any other solutions besides you guys, and like why are you guys any different from all the other P2P solutions if there are any?
Yeah, so there is Binance P2P, which is heavily used. Binance P2P has two issues to the users. One is the whole privacy angle. You need to sort of submit your local KYC, and people hate it because the tax regime is really bad over here, and customers use WhatsApp and Telegram groups as a bypass instead of using Binance P2P. So there is a lot of big black market of P2P merchants who people go to and do trades, often get scammed and get defrauded. So Binance P2P, WhatsApp groups, Telegram groups, your local P2P merchant. There is a huge fostering ecosystem of a black market where all these trades happen across the globe in emerging markets. So this is where people go to. We give them a safe, private alternative, instant alternative, which is fully organized on chain for them to sort of don't have to go through all these fraud, or going and doing a chat with a P2P merchant or some shady channel somewhere. We sort of organize and give them a high NPS experience where they can sort of come back for again and again.
And could you break down a little bit of like you guys are asking for $6 million, which is one of the biggest MetaDAO raises so far. It's a pretty
Yeah,
huge one as like a baseline. So could you
yeah.
break down why that number, why raise at this FDV, and like what are you guys going to use that money for? I know you mentioned some stuff in the article, but it would be nice if you could perhaps reiterate some of that.
Think about how big this opportunity is. Think about like Uber, right? Like you had cabs, and the Uber came in. It said, "Hey, there's a mobile app. You can call for a taxi or a cab. It sort of comes and picks you up." And it sort of became a global phenomena and such a big business. We are sort of talking about a similar dynamic here, but for P2P on-off ramping, right? There is a need everywhere. People want stable coins, and for people to sort of now there is a layer of how big stable coins can get, and within that layer there is a layer of, if stable coins are going to get that big, how big will the access point look like, right? So we are trying to sort of become the Uber for stable coins to people, right? That's a huge opportunity ahead of us, and if you want to capitalize on such a huge opportunity, honestly, anything less than $6 million right now is undercapitalizing the opportunity, so that we will actually fail as a company because we have less money to go after the problem, right? So that's the way we look at it. But however, coming back to how we are going to spend the money. So we are looking at this $6 million as 18 months runway for the team at 175K. That is $3 million, and we are going to use the other $3 million to sort of put up futarchy proposals, mostly tuned towards growth, either launching new markets or setting up proposals for B2B integrations or grant programs and stuff like that. So on the whole, we can look at this $6 million. Half of it is parked for the team for the 11s for 18 months. Other half is to sort of fund the growth across geographies and across business use cases.
Yeah, if you guys want to grow this to, on a global scale, you're going to need to have that amount of capital available because it is a huge undertaking, as you said. Like there is a big addressable market here. Mm, and so, yeah, I've also seen perhaps hints at token utility. Now, I'm not a very big advocate of token utility. I'm totally fine with just ownership of the company itself. However, if I remember correctly, you guys did mention something about the
Yeah.
token utility, but do correct me if I'm wrong.
Yeah. So token utility comes in growth. We have a growth model that we built called circles of trust. A circle of trust is like a group of P2P merchants managed by an admin in a given jurisdiction, right? So imagine we want to launch Ghana or Kenya or Nigeria for that matter. Like, so we don't really have to physically go there and build a team and do it. We can just sit here. We have the token. So anybody in Ghana who is bullish about this protocol can buy some token and stake it on the protocol as a security deposit and build the business over there, pull the merchants and build a business over there to sort of launch Ghana, and then get a share of the volume of the business they do there because they sort of took the risk of staking the token and growing the business up there, right? So think of it like Uber, but franchised out in each country. Like how do you sort of give a franchise out in each country so that the Uber sort of grows as a franchisee network? So circles of trust in P2P protocol is a similar concept where you sort of use the token as a security leverage, where anybody can sort of stake some token and build a circle over there and get a part of the revenue as a revenue share for them to build that market out, which is the growth model we are going to pursue after the MetaDAO launch, which we believe is going to sort of exponentially scale us across geographies. So that is the token utility. So the token is used as a security within the protocol to sort of fund expansion across the markets.
Staking, okay, so you can stake your tokens, and w- you guys are multi-chain, or from what I know, you guys are on Base or on EVMs now, and so, but I know that you guys are expanding to Solana, and you are dropping the token on Solana. So
Yeah.
why Solana? Is it just a coincidence that MetaDAO is on Solana? Is that something that is Solana somewhere you guys wanted to expand anyways?
So to be honest, the moment we sort of decided we will do a token, I started talking to all the ICO platforms like Legion, CoinList, MetaDAO. So I mean, we started reaching out to a bunch of these players. So Solana is a decision we made even before I reached out to these players. So Solana is we didn't decide to launch the token on Solana because we are doing MetaDAO. We decided to launch the token on Solana and then decided to do MetaDAO, right? The reason is we are going multi-chain, and we are going multi-chain starting with Solana, and we believe that Solana would be the right liquidity hub if we go multi-chain, right? So that's the approach. So yeah, we will be going multi-chain. Solana will be the liquidity hub for us. That's where the most amount of our token will be trading in the future. So we are very glad that we got the validation from MetaDAO as well. We got a launch partner on Solana because we thought of Solana as a liquidity hub for our token launch. So Solana will be our hub. Now that we are launching MetaDAO, we are going to sort of get access to Solana community, which will make our Solana launch even faster. Our UIs will support multi-chain. You can sort of switch to whichever chain you want and access P2P liquidity in that market and that chain. So that is going to be the future. So given so we saw Solana as the multi-chain hub of liquidity for us.
Yeah, that's super, man. That is awesome to hear.
Yeah.
As a Solana manlet myself, you guys expanding to Solana does make me smile, and especially the fact that you're doing futarchy and all this. I think this is very,
Yeah.
very great. I
Yeah.
think I actually got most of my questions that I had answered by now. I don't know if you have anything else you maybe want to tell the audience before we wrap this up.
Yeah. Yeah. So I have a closing thought that I want to share with the audience. Uh, we are a different kind of launch on MetaDAO so far. If you sort of look at the past MetaDAO launches and compare us, we are, as a company, we are much more mature in terms of how many years we've been building, from the amount of technology we have built, and the revenues and the growth we have showcased in the past. And I think we are also the first formally institutionally funded company to ever launch on MetaDAO so far. So we are coming in with a package of our own. So I just want to share the best way to look at us. Look at us as a potential 100x to 1000x outcome, because we are going after a very large TAM with a very after a very big problem. We are not trying to bootstrap a business which is going to grow 10% every month and give you returns in the short term. We are definitely if you are looking to buy an optionality for something that is going to be really huge very early, and come support us on this journey, we are that investment for you. So that's the right angle to sort of look at us. So yeah, so thanks a lot for sort of uh, staying around and going through this podcast so far. Thank you.
Yep. Thank you everybody for listening, and thank you to MetaDAO for sponsoring the episode. You guys can hop into our Telegram at Ownership FM. We can find us on Twitter, or actually, it's called X now. But yeah, man, it was awesome to talk to you, and I guess I'll see the audience in the next episode.
Thank you.